Okay, silver. I mean, this is like an icon for a lot of people. It's like a cross of silver will ward off the government vampire. Look, I'm a big fan of silver from the point of view of fundamentals, from the point of view of market psychology. My view on silver is that we're likely to have a speculative bubble in silver as well as in gold and gold stocks. The Robin Hood people, and there's 20 million of them that are looking for a way to double their money overnight, they're eventually going to migrate into commodities with a good story. And silver's got an excellent story. And silver stocks have an even better story than silver. And I've personally been involved in the past in a number of stocks that have gone 100 to 1, I'm not kidding, and not over the course of a lifetime like Berkshire Hathaway, but in the course of a market cycle, 3 or 4 years. I've even owned a stock that went 1,000 to 1. That happened to have been Diamond Fields. So, yeah, you're going to find the public getting involved in silver and gold and all these stocks. It's going to happen, and you ought to be positioned in them now. Maybe I'm wrong. Maybe it'll never happen. I doubt it, though. Well, it's a small market to start with. Number one, it's a small market in world terms. Number two, all the gold that's ever been mined since the dawn of history, and I'll guess 6 billion ounces, that's a reasonable number, is still above ground somewhere. It's accessible. There's about 800, 900 million ounces of silver mined every year, but there's not a lot of it that's sitting there in a pile the way it is like for gold. So that because of the lack of above ground inventory, it's very volatile. Other favorable things for silver is that it's a high-tech metal. You've got to remember it's the most reflective and the most conductive of all metals. So there are more and more uses found for it every day. I don't think you can go wrong with silver. And at $25, it's not like at giveaway levels, but it's still pretty cheap right now. And it'll have its day in the sun. I wouldn't doubt that in the next few years we've seen $50 silver a couple times in the past. I wouldn't doubt with the trillions of currency units that are being created by the US government and other governments around the world, I don't doubt that within the next year or two we'll see $100 silver. Maybe as outrageous as this is to say $200 silver. I might be looking to sell it and see what's cheap, what I can trade my silver for that's cheap. For all I know, maybe it'll be Berkshire Hathaway by then. Well, I've said for years that we're headed towards what I call the Greater Depression. And I call it the Greater Depression because it's going to be much worse and much longer lasting and much different than the unpleasantness of 1929 to 1946. So, in light of that, what should you do? Especially since all over the world, all the countries of the world, freedom is retrogressing. I mean, a perfect indication of this is the COVID hysteria. And I say hysteria because, to me, it seems like just a nasty flu that's been promoted into the proportions of the Black Plague. Look, here's the problem. Since interest rates last peaked in the early 1980s, when you'll recall, the U.S. government was paying in between 15 and 18% for money. Now it's paying 1%, 2%, close to zero actually at this point. Interest rates are negative in real terms. So we've had 40 years of interest rates that have been going down, and it's no coincidence the last 40 years has been the stock market going up. These things are cyclical, and the stock market is greatly overpriced. Whether you look at price to dividends ratio, I mean, in those days, you could get 15% on utilities dividends, and the dividends were going up. Price to earnings ratio. I mean, in those days, you could get 6 or 7 times earnings on lots of stocks, quality stocks. Now, there's stocks out there, most stocks don't even have earnings, believe it or not. But the S&P's price earnings ratio is something on the order of 35 to 40. I mean, it's just grossly overpriced. So I don't want to be in stocks right now. Absolutely don't want to be in bonds. They're a triple threat to your capital. You've got the inflation risk, you've got the interest rate risk, and you've got the default risk. So it's hard to find a place to put your money where you're not going to lose it and where you have a chance of making money. But during a depression, it's been said quite correctly that during a depression, everybody loses. The winner is just the person that loses the least. So the name of the game now is to make sure you keep what you have. Unfortunately, for most people, the best way to just keep what you have is to learn to be a speculator, to take advantage of the wild surges up and down that we're going to see in all markets now for the indefinite future, at least the next 3 or 4 or 5 years. I expect the current system to basically fall apart, and I don't know what will come after it. It's not going to be easy to pick the right horse to ride in crazy times like these. But an ideal speculation, if you can find it, and you don't find them every day, is to do something like buy gold when it was $35 an ounce. Well, I bought it shortly after that. I've been buying gold since then, 50 years. God, it's a long time. And I've never sold an ounce, okay? It was a great speculation to ride it from $35 to $17.50 and going higher. And there will be other things like that in the future. Who would have guessed that the U.S. government would take interest rates down to close to zero to keep the collapse from happening, and in addition, print money by the trillions to make it possible for debtors to pay their debts instead of being wiped out and wiser allocators of capital getting their assets. So what can they do at this point? Well, they might be able to do something, but I do see a continually dropping standard of living for the average guy. And the definition of a depression, the best definition, is it's a period of time when the average person's standard of living drops significantly. And I think that's really been the case for the last 50 years since the devaluation of the dollar for the average guy. In real terms, he's earning the same or less, but he's head over heels in debt today, which he wasn't back then. And the government is bankrupt today, which it really wasn't back then. So, no, I'm quite correct in predicting a depression. People expect when you predict a depression that we're going to have something like an instant replay of what happened in 1929. Well, I've never said that, and nor do I say that today, although it's a possibility. So what I'm trying to do is educate people in the way I think the world works. That's what the study of economics is about.